Greetings everyone, welcome aboard. My name is Joseph James. It's July 20th, 2010. Here's your live trade room recap brought to you by SchoolTrade.com. Hope you guys had a good day in the room this morning with us, guys. Well, I hate to break it to you guys, we had kind of a tough day today. I know. The biggest profit of the year, 2010, was today, the biggest day of the year. Are they sure they know what day it is? Summertime trading, we're not supposed to be breaking daily profit target records, guys. All right, but we sure did. As you guys know, you're watching this from the blog right now. Before we talk about the trades we took today, guys, I want to remind you, 4 important things on the blog. First of all, upper right-hand corner, use the search box. The search box allows you to find pretty much whatever you're looking for here on our blog. Now, right below the search box is our live support button. That friendly young lady is waiting to take whatever you need and help you out. So use the live support button, guys. Members, guests, use the live support if you have any questions. Right below that, you'll see our YouTube page, our Twitter account, our Facebook page, guys. Come join us. Come follow us on Facebook, right? Be friends with us on Facebook. We put all of our stuff on Facebook all day long, too. But the most important thing you guys need to do here is follow the blog. In the lower right-hand corner, you'll see all the followers. We get more and more every single day. I want you guys to follow the blog. That way you get instant updates whenever we post a brand new article, like we did last night on candlestick patterns. We posted a couple winning trade calls this morning in the blog, right? 21 range, some day trades in the blog. And we post our daily videos there up to 3 times a day. So guys, on the blog, 5 to 8 times a day, we're getting brand new articles, videos, topics to talk about, guys, so make sure you're following the blog. Now, if you can't follow the blog, make sure you sign up for the newsletter. Now, right below that box for the blog, for the follow box, is the sign up for the newsletter. If you can't follow the blog, make sure you sign up for the newsletter because the newsletter will email you guys whenever we're putting new stuff on the blog. All right, now let's get to the meat and potatoes. You guys didn't hear me come to talk about the blog today. 2, 4, 6, 8 total trades, right in that sweet spot. 192 ticks, 21.23. That makes this the biggest day by over 10, 15 ticks. Right, the biggest day we had here was the first of the month here in July at over 2,000 ticks. Well, I'm sorry, yeah, $2,000, 200 ticks. And of course, we really didn't expect to see, I'll be the first to tell you guys, was not expecting to see such great results today. But again, like we were talking about in the room this morning, what made today so special was that we really didn't do anything out of the ordinary. We took the trades that showed up. Now, obviously, yesterday, we took a big loss on the euro. Today, those were both winners today. Okay, so you can see the big difference here. Yesterday, we gave back about 80 ticks, and we ended up with about $410. Okay, not a bad day, but could have been well over that. Today, of course, we didn't have that loss, and today we made that money. So instead of losing the 80 ticks, we made the 80 ticks, and you guys can see what happens, right? 21.23, biggest day of 2010. Might be the biggest day of my trading career in the trade room, not sure. But guys, as you guys can see here, though, 88.9 now, almost 89,000 for the year so far, guys. If you're looking to make 6 figures, we're in the month of July, the 7th month of the year, and we're almost to 6 figures here, guys. 16,000 change for the month so far. We'll keep you guys posted as we make our way through the month of July. Now, what's the most important thing that happened today? Well, it's a summertime Tuesday. We didn't have much news. We had Bank of Canada's rate decision at 8:30. They raised rates by 0.25%, second time in a row. Okay, they see long-term outlooks looking pretty rosy up there north of the border, right? But we really didn't know what to expect. We had, of course, summertime trading. Remember what happened yesterday? Yesterday's markets were all sideways and slow and choppy. Not really much moving late last night either. So if you were watching the blog last night, we posted some trades in the blog last night. All of those trades worked out pretty wonderfully, actually, too. But one thing we saw last night, though, when I was reviewing the markets last night, was the same thing from yesterday. Sideways, choppy markets. And so this morning, we really didn't know what to expect. We hadn't really seen very much movement so far. What really got our attention, though, was the dollar began to break out of this sideways ranges. Let's take a look at that, because that's pretty much what got us going this morning. Okay, the dollar leads everything. In fact, today we talked specifically in the trade room this morning about how we use the dollar index. Now, guys, first of all, here's where my sideways range was here in the dollar. All right, so my sideways range here on the dollar, there it was right there. So once we broke above that sideways range, okay, we expected things to start moving. Okay, so here at about, just after 8 o'clock, you can see we started breaking out of that sideways range. So that's what originally got us going here. Now, do you think the Bank of Canada's rate decision may have had something to do with this? Absolutely. right? It's hard to imagine a world where the dollar index would not be correlated somehow, right, to the, of course, the same type of index in Canada, right, the Canadian dollar index. Okay, so when the CAD news came out this morning raising rates, okay, that of course will push that dollar up. It's going to be a negative correlation. Okay, think of it this way. Raising rates on the Canadian dollar will have a negative effect, right, on the Canadian dollar itself, right? Will push the dollar down, the Canadian dollar, which of course is a negative effect on the US dollar. Now we talked about, right, the dollar index correlation, and we even pointed you guys right to the blog. If you go to the blog right now, under Trade Room Resources, look for that link that says dollar correlation. And guys, read that article. It's a fantastic article. But this, guys, was what first got us going here on the dollar. So that's what resulted in the movement this morning. Now here on the euro, though, I wanted to show you guys something real quick because we took two big winning trades in the euro. Now first, let's zoom in here real quick at this level, at 28.69. Now guys, 28.69 is a double bottom, but most importantly, though, look where it is. It's just above what we call our trigger zone. Now, what's our trigger zone? Our trigger zone here, right, this box right here, okay, it extends out. So here's our trigger zone, right? There's our zone. It's basically above, we'll say 28.36, right, all the way down here to about, we'll say 27.75. Okay, so 28.36 down to 27.75. So there's my trigger zone, right? Got this trigger zone right below us. Now, guys, what this means is that when we enter into the trigger zone, okay, here's what's ultimately happened. Follow me down here, lower right-hand corner. And what's happened here is we've made our move up. I'm then going to apply my trigger zone tool. Let's get this different color here. Okay, from my low to my high. And then that trigger zone tool is going to define for me here my trigger zone. Now, my trigger zone is where we expect to see some sort of reversal. Above the zone, the buyers are in control. Below the zone, the sellers are in control. All right, everybody with me so far? So here we are on the euro. We're resting now above, right, above our trigger zone. And to make matters a little bit more difficult, we have this, right, double bottom there, 28.69. So here we were, above the trigger zone, which of course could be considered to be the transitional zone, right? If we end up getting down into this trigger zone, there's a high likelihood we're going to keep going. But if we can't, we're probably going to bounce and reverse back to the upside. Okay, now back to my chart here. Looking over at my trigger zone, we're above the trigger zone. Okay, so we're above that trigger zone. But we also, of course, we're getting chopped up here around this 28.69 level. Now, what we decided this morning was if we got into the trigger zone, we'd be looking for a short. But if we didn't get in the trigger zone, we're going to be looking for a long. All right, that was what we decided this morning. Again, remember, guys, this is at 8:30, right? We were just getting started this morning. Okay, so make a mental note of that. If we get below, let's say 28.35, we're going to be going short. But if we stay above, let's say 28.50, we're going to be looking for a long trade. And then last but not least, right, watch this right here. See where my sideways range is? See that? There's my trading range. Okay, so there's my trading range up top here. We talked about sideways markets yesterday. We talked about sideways markets today. Okay, lots of sideways markets when it comes to our trading, guys. And so now we're going to find ourselves at the low, right, compared to the high of this bracket. All right, guys? So if we stay above the trigger zone, I'm looking to go long the euro. If we get below the trigger zone, right, 28.50, we're going to go short. Let's see what happens a little bit later on in this video here. Now, our first trade of the morning was here on gold. Now, guys, at this point, we should all be experts at buying the lows and selling the highs. Now, first of all, follow me down bottom here, lower right-hand corner, and let's look at the fast time frame. Here's my fast time frame.